Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Tuesday, April 12th, 2022. Market staging a solid gap higher today, only to give up all of their gains and sell off sharply. So again, this is the daily chart. The reason why I'm starting on the daily chart is I want to show you guys again, this was a major trend line we were watching. Yesterday, we did close below it. So again, that puts us in a bearish stance. Even with the market gap up today, look at how we came right back in. If I flip over to the 10-minute chart here, you can see it even more dramatically how we had this gap up today, and this came on the back of the CPI number. The CPI number reported at 8:30 a.m. Eastern Time. It was hot at 8.5% inflation, essentially, but the market had been worrying that it was going to be much, much more. And that was the kicker. So initially, that was a positive. The market kind of breathed a sigh of relief initially. It was only short-lived, though. Notice 1, 2, 3 green candles to the upside on the 10-minute chart before we came sharply to the downside here and selling all the way here until the final. Now we're entering just about the last 30 minutes of the trading day. So again, the selling here today has been really robust. Volume on the S&P 500 is not huge. On the spiders, it's about 65 million right now. We'll do about probably 75 by the close. It's solid, but it's not mega. It's not big volume. But again, bottom line is there just aren't a lot of buyers in this market. Even on that slightly better maybe than expected CPI number, no one's buying it. And what I mean by that is that, you know, it doesn't matter if the CPI number is 8.5 or 9 or 8, right? It's still a horrendous number. The Fed is going to have to hike tremendously to kind of get inflation under control. That by itself is going to likely push the economy into recession. So what's the angle for buying stocks? Why would anyone want to, buy stocks at least on a longer term basis? Sure, there's swing trades available. There's actually some levels that I'm watching on individual stocks that I like as swing trades. But in terms of long term, meaning 6, 12, 18-month periods for holding, I just do not see it. All right, folks, I just do not see it. We are seeing a little bit of a bounce right down here on the SPY, so you're getting a small kind of, last 30 minutes bounce type move, but certainly it is not a robust bounce, and we're still going to end with a nasty sell-off in the S&P 500 as well as the NASDAQ. The NASDAQ was actually the strongest one this morning with the biggest gap up. Pre-market, get this, after the CPI number, we were up as much as 2% pre-market on the NASDAQ. All right, now put that in comparison to where you're basically flat. And you can see you're still kind of eking out. Actually, that's the 10-minute chart. We're actually down here on the day. Let's flip over here. You're down about 0.5% or 0.6%. So that's a big swing, from up 2% to down 0.6% here just off the lows of the day. Now, according to my charts, you do have some support that I'm going to be watching tomorrow right at this level. I do plan on putting some buys into play here should we get there. Again, you guys know yesterday I picked up some Zoom. That was doing really well this morning. We were up nicely on that, almost as much as like $7, $8 on it. And then, once the market kind of gave way, it came right back in. But there are other names like SoFi, S-O-F-I. There's other ones like Teladoc that I'm keeping a close eye on. These are the names that if we can flush into this level on the technology-laden QQQ, the NASDAQ 100, those I will be accumulating for a very short-term swing trade. And we can just use this market. Whether the market wants to go up, that's fine. If it wants to go down, that's fine. Just do it fast. Fast is what gives us the trading opportunities to trade this market actively and make money. All right? By the way, speaking of fast, I loved the reversal today on natural gas. Take a look at this, folks. This is what I've been waiting for. This is why we've just been accumulating natural gas on the short side via shorting the the UNG. Look at this daily topping tail, all right? Is that a beauty or what? In addition, I'm going to show you something that is just epic. And this is, for those of you that are new, you probably don't get this stuff. You don't understand the charts that well. But again, the charts are unbelievably powerful. Not only is that a topping tail on the daily chart, but I want you to go to your monthly chart and look at this. In fact, weekly's even better. Let's go to the weekly here so we can see more. You take the high pivot going back to 2018, connect it to the high pivot here on natural gas in late 2021 in October, and then look at what we just pierced. That is an absolute beautiful trend line with a major reversal topping tail on it. Now listen, you could have a retrace tomorrow. Retraces sometimes occur, but bottom line is you're getting the signals of max upside at this point, and you're likely about to start a big reversal in natural gas. All right, where could natural gas fall to? Well, I mean, it wouldn't shock me to see it come all the way down in this range. $5.50, maybe these pivot points, $5.30. We'll kind of wait and see, but don't be surprised if it does that. And you're talking about like 20-30% downside potentially on natural gas, which would be very, very solid for us as those that are short the UNG or if you're long KOLD. Okay? So beautiful little move there. And again, I love showing the trend line there because it's so cool. It shows you how you have to go to bigger time frames to see bigger trend lines, and again, how accurate those big trend lines could be. All right, let's flip back to the QQQ daily chart here. Qs again, watch this support right down here. That is around 335. We're at 338 and change. If we open there tomorrow, do expect some buy alerts to come out, assuming I see the right things in the charts. And again, they'll most likely be on the aggressive tech names. I don't think I'm ready to, like Microsoft hasn't made a low yet, I don't think, for a big bounce. But nor has Apple, by the way. Some of these big cap tech I still think have more downside. But I do think names like Teladoc and Roku maybe, and SoFi, and some of these other ones, SE could be an interesting one if it opens lower tomorrow, that are retracing after these big bounces. Like for instance, if you look, first of all, look at SoFi. SoFi is making new 52-week lows. So this is just getting into really oversold scenarios. 2, 4, 6 candles essentially down here. So you're coming into a time count, which is one of the reasons why I like that. But then if we flip over to something like, let's do Teladoc. So Teladoc here, by the way, Teladoc's actually inching, it's slightly higher today. I was hoping it would be down by now, but it's not. But these are the types of moves I like. You see this trend line here, this flat line here, and you tagged it right here. All right, that's a bottom until proven otherwise. Now you have a retrace off of those highs. You look to accumulate. All right, let's take a look at Roku here. Bear with me. Yeah, Roku, nice move up, consolidating down. You have a level to trade against right at those lows. I like that chart as well. SZ, let's take a look at that one. Same thing, big move up here. I mean, this stock, by the way, and we caught this on the upside, which was awesome, from $85 to $135, then back to $109. I would love to see this thing open around $102 or get down sub $105. Maybe it goes to gap fill, but then we can just accumulate more right here. But either way, you're getting that retrace back in. That's what we want to see. Also, just a heads up, I'm also looking at semiconductor stocks. This is a big level on AMD, right into this level. I haven't picked it up as a swing yet, but I do like it quite a bit on AMD, folks. So any sort of gap down tomorrow, AMD looks really interesting. Major support. You also have a level just below it around $89 to $90 right down here, which would be an add level there. Let's take a look at the Russell real quick. Russell again down. Interesting thing on the Russell, it's actually still slightly positive on the day. So again, just take note of that. Slightly positive. That again tells you that it's big cap tech that is mostly hammering this market. So when I say big cap tech, we're talking Microsoft. Look at this drop on Microsoft. I mean, when you have a multi-trillion-dollar company dropping like this, it's going to take the indices down with it. It's just impossible for it not to. Google down 38, Amazon's down, Facebook's down. Apple's actually bucking the trend up a little bit. Tesla's up a couple bucks on the day. But again, overall, big cap is under pressure. And again, interesting to see some of the smaller ones like a Teladoc eking out a little bit of a gain. Bitcoin had rallied sharply here. It has come back in. Bitcoin is at a major support line here. I want to show you guys this. Again, right here is major support. You're just kind of touching right below it right now. But again, major support right here. If it dips, it's going here. This is your next spot, right down around just below 37,000 would be your next level on Bitcoin. All right, what a drop, by the way. I think this move to the downside took a lot of wind out of the bull sails. Now, you guys know my midterm outlook is for much lower, sub 20,000 potentially, or at least 20,000. And again, that's based on this down move and this choppy sideways inside bar pattern. But when you had this rally up like this, it was such a consistent grind up, and it went right up here. I think there, if you looked at social media, you saw it. There were just so many bulls out there that were jumping back on the bandwagon. They obviously weren't looking at the charts though, because you saw this major trend line here and the 200 moving average. And again, this type of drop, see how fast this drop is? It's even faster than the move up. That takes a lot of wind out of the sails of the bulls and will make people get more bearish, which will ultimately lead to more selling, even if you do get a short-term bounce. So interesting one on that one on Bitcoin. But again, I still think you could get a small technical bounce here, maybe back to 42, 43, 44,000. But ultimately, it is going to go lower, and this white line will be your next support. Gold today. Gold actually having a good day. Nice little continued grind up. This is the 4th up day in a row on gold. Very solid move. I'm still watching this area here. If you take this high right here and you stretch it out, look at how price is right at that trend line. We were above, but right now we are basically right at that line. To me, I'm not ready to call this a breakout yet after the consolidation, even though I think gold is going to go way, way higher. I still am skeptical that the time is yet. I'm not quite sure the time is yet, although again, it's probably sooner than later. I mean, again, squabbling over $100 of maybe downside for the potential of 1,000 or more up to the upside, in my opinion. But either way, we'll see if it really can get above this line, or does it pull back just a little bit. By the way, market's making new lows here, so again, the selling continuing into the end of the day. We still have about 25 minutes or 20 minutes or so left in the trading day. Let's take a look at silver here, and silver, same thing, grinding up. So again, nice little move there. Again, maybe one more dip down here. It's hard to know. Either way, silver does, in my opinion, have $30 written all over it at some point in the near future with these tops. And again, something just to keep an eye on there. Lastly, oil. Oil getting a big bounce today, folks. Nice bounce back above $100 per barrel, up over $5 on the day. That's fine. And I'll tell you why. Because I would love to short oil again. I absolutely would. Where would the shortable level be? Well, it's a little tricky here, but you could make a case that even today you're tagging it, right? Here's your breakdown, and here's your retrace to the scene of the crime. Not a big enough bounce for me to feel comfortable shorting it, but again, for people that are more aggressive, that's probably what you're looking at as that level. Maybe we'll see what happens. Again, maybe if we see enough, I'll give it a shot. But right now, again, I'm staying on the sidelines of this one, especially since we have natural gas exposure. At least we got the energy exposure. Plus, we have the shorts on Exxon and Chevron, which I think will play out beautifully anyway. So it's almost like you're short oil in that respect as well. All right, let's go back to the spiders here, folks. Spiders, again, just continuing to get clobbered here. $3 down, or 0.7% to the downside. Again, that's 0.7%. You'd say, okay, that's not that big of a move, but you have to factor in where it opened today. And the high of the day on the spiders was 445.75. We're at 436.90. So we're not that far away from being a full $10 off of the highs of the day on the SPY, which is a big move. If we had opened flat and we're down $10 on the day, we'd say, holy cow, that's a big spider sell-off. But again, a lot of it was in the gap up. By the way, the fact that the gap up hasn't held and that the indices have gone negative, that is a very bearish signal. All right, I mean, the markets had every reason to bounce today, and they just couldn't. Now, in all fairness, you want to know why the markets couldn't bounce, very simply put. It's because the 10-year yield initially traded down on the back of the numbers, and I guess it's still down a little bit, but it did come off of its lows. But markets, again, like I said at the start of this video, you have this situation where, and I've said this before, folks, where's the possibility of a good outcome here? All right, you have inflation that's 8.5% off the CPI numbers. We're going to get PPI tomorrow. We'll see what that says. I think it could even be a little bit higher on the producer side here because the producers haven't passed it all the way through to the consumer yet. But again, the Fed is going to have to hike rates. That's going to slow the economy. That's just standard knowledge. Hiking rates slows economies. All right, it sucks money out of the economy. All right, so now it sucks money out of the economy slows. And then what happens? Well, you slow enough, you go into a recession. How do we get out of a recession? Well, in the last 20, 30 years, the Fed printed money to get us out of a recession. They can't do that with inflation at 8% or 8.5%. Even at 5 or 6%, can they do it then? I mean, what is that going to tell us about, if they start printing again then, what is that going to push inflation to? 12%, 15%? I mean, it is an amazingly nasty situation where I just thank the Lord that I'm a swing trader. I mean, this is our bread and butter, and this is a market where personally I would be not sleeping well, being all long, especially if you were leveraged all long in the market. All right, there's just too many ways. I mean, again, I've racked my brain, and I consider myself reasonably smart, not the smartest person in the room by any stretch, but I would love to find out, well, how do we get out of this situation without worsening? And again, inevitably we're going to go to a recession. Whether it's at the end of this year or next year or the next year after that, there's going to be a recession. And the question is, with inflation high, how do we stimulate to get out of a recession? And the problem is, if you don't stimulate, it's going to be a prolonged recession or even close to depression. And smart money has to be knowing this. I mean, listen, I'm not the only person in the room that understands kind of how things work here and how the ultimate outcome is going to be. So any way you cut it, it's getting to be pretty nuts. And I do think, again, that it's going to be a trying next 5-10 years for the U.S. economy, unfortunately. Unfortunately, it is. All we can do is just understand the trends, the levels, and just trade it accordingly. I think that's what we have to do. Spiders are getting a tiny bounce again, but very small bounce, down about 0.6% versus 0.7%. And again, we'll keep an eye on things. But bottom line is, I bid you all farewell. Thank you, as always, for being members. Again, I did short Mosaic today. I guess I didn't cover that. But again, shorted Mosaic. I have all the topping signals in the world right here on Mosaic. This is a thing of beauty for me. And again, I like this quite a bit. And again, you can see, look at the move up. This is the monthly chart. Look at this 3-bar monthly surge. Incredible. Absolutely incredible. And again, you're coming right into this area right here. There's some resistance right here. Maybe it goes up here, but we can just add to the position and accumulate. But again, based on a 3-bar surge here, you should see this thing coming in. And look at the move on this from basically down here $7 to $75 in just a couple years. Remarkable. All right, have a good one, guys. Talk to you later. Take care.